having an NBFC license is like a blessing for any fintech, I would say, in today's age. How are you managing the two of them? And since managing a portfolio,
My family has been in the stock markets for over 35 years. My dad runs that. It's a great way for me to learn actual business lessons from other people.
hi everyone. Welcome to another episode of Startup Stories India. I'm your host Tanmay. I have with me Mr. Aditya Damani, who's the founder and CEO of Creditfair. Creditfair is an Indian consumer lending fintech startup with its mission to create a fair and inclusive financial world for every Indian. So I wouldn't want to give away much of the introduction of Creditfair and Mr. Aditya. So I want you to hear it from himself. So thank you so much, Mr. Aditya, for joining us today.
Thank you, Tanmay, for having me. It's a pleasure to be here.
Right. So Aditya, I just wanted to start off with how has your journey been from a corporate world and working for organizations like PIMCO and advising new age fintechs and startups, and now building something of your own. So how different is the founder's life or entrepreneur life from a normal corporate life?
Okay, thanks for this. So I started my career at PIMCO, which it's one of the largest debt asset management companies in the world. I was working there from 2006 to 2008, and it was a great training ground for me. I got to learn so much about a whole new market which I never even heard of. I think in India, everyone talks about stock market. People are not really
Right.
well aware about the debt markets or bond markets, etc. But actually, these are double or triple the size of the stock market in almost all the developed countries. So
Absolutely.
yeah, I mean, I think a corporate is great at the beginning of your career. You get to learn a lot. You get to learn more about um, the professional ways of doing things, like the soft skills you can pick up in a corporate. It's very difficult to pick up in a very self-employed type of business, and also the hard skills, because PIMCO helped me with giving me guidance that okay, I could do the CFA, I could do so many other courses or so many other skills, whether in Excel modeling or within the financial products as well, that I can pick up. So yeah, I feel
Right.
like in for me personally, corporate is like an extension to the university education, and it's like getting the practical education of the business world. And yeah, like running your own thing is very exciting though. For me personally, it's a lifestyle choice. It's something where I feel like I'm motivated by both the opportunity to create something big, but also the opportunity to focus my time and effort on where I feel I could deliver some more, not just economic value, but also like societal value, if I put it, deliver a impact. So yeah, I think
Right.
that's where I see the big difference between working in a corporate or doing your own thing. When you're doing your own thing, like it's like you initially have to be the sweeper to the boss, and over time you build
Absolutely.
the company.
Absolutely.
Yeah, but ultimately you know what you're sweeping for, or you know what you're like hiring people for, and that motivation can be lot more powerful.
Right. So the main idea I picked was you talked about the impact you want to create as an entrepreneur or as a founder.
Yeah.
I found this with Creditfair also. Like the motto was fair finance or fair credit for everyone.
Yes.
So just to delve down deep into this, so what's the business model for Creditfair, the company which you are building, and how is the impact that is being created aligning with your personal objectives of creating that impact on the society?
Yeah. So I worked at PIMCO. Then I did an MBA at London Business School a few years later. I worked in UK as well at a lending company, and then started up Creditfair, to give you a little bit more context. And while moving from that lending company in London, which was called OCAM, to starting up Creditfair, the mission statement was, how can I help 1 million people improve their finances? So
Oh,
I felt
wow.
that in India, the opportunity is a lot larger. India has 1,000 million plus people, right? So even if I can help 0.1% of that, that's a big thing for me, and I'm very happy. and it would be easier to kind of find that level of audience here. Secondly, still like the number of people in India who have a credit history is like very low. There would be maybe
Right.
50 million people who have a proper credit history. There are well over 800-900 million adults in India, right? Just felt like that is the type of audience I wanted to help. Like, how can I help people who don't have a credit history come on to building a formal track record? Because that is going to be like I mean, you have your Aadhaar, but if you don't have a CIBIL, it's like you are in a way handicapping yourself. And people
Right.
who have a good credit history will move fast forward compared to people who don't over time.
Agreed. Yes.
So that was a big part of the motivation on financial inclusion. This
Understood.
was a very high level problem, but you also need to build a very sustainable business which can run on its own and which can be profitable. So we focused on a go to market strategy where our customer acquisition cost should be almost zero or basically zero. And that's where we believed in partnership driven model, in a B2B B2C model as we call it. So what we do
Yeah.
is there are tons of very fast growing as well as very interesting businesses in India, and they are looking for credit solutions so that their customers can buy something easily, and of course as a business, like their sales can increase. So that's where we figured like just sort of copying the Bajaj Finance business model of providing no cost EMI or easy EMI, but for very impactful use cases would be something that we should focus on. So we started off with
Okay.
healthcare, then we added education, and now we've also focusing on rooftop solar. So we focus on a business model, like I said, B2B B2C. That way, I don't have to spend money to acquire the customer. Like in the case of healthcare, Indra IVF is one of our partners, refers patients who are looking for loans. In education, we work for upskilling course providers, work with upskilling course providers like an Upgrad or a Scaler,
Yeah.
and they are referring their students to us. In rooftop solar, we work with the likes of Tata Power, Redington, Enphase, and Plus. So these large companies refer their customers, who could be MSMEs, who could be homeowners, who are looking to cut their electricity bill by 50 to 100%. So that way we have been giving loans for purposes where there's a clear ROI for the customer. Here, I take a loan, I put up a rooftop solar. In 3 years to maximum 5 years, I break even, and then
Yeah.
20 years more, I'm getting free electricity.
Right.
So that way, we were able to have identify win-win scenarios where the merchant is happy, they are improving their sales. The customer is happy, they are buying something which can help them improve their earnings or help them save money, and we are happy because
Right.
we are in the business and we are able to grow our business as well as make some profit.
Great, great. Thank you so much for that detailed description. So I believe it's a very common problem in especially Indian market, wherein as India is always a credit thirsty country and we're always looking for financing solutions. And with your 0% or no cost EMI structure, it solves a lot of problem. And while on the side, it generates some additional revenue for businesses. So
Right.
that's a very interesting proposition you have and a very niche segment you have catered to.
Yeah.
So, just as an outsider, I'm looking at a business model wherein the customer is not paying any interest. So,
Right.
how are you as a business sustainable in the sense that how are your revenues being generated and how are you scaling those numbers year on year?
Right. We do both. We offer a loan product where it's a no cost EMI, or some products where the customer pays the interest cost. Yeah, of course, the revenue then for us comes from a discount rate provided by the service provider. So let's say,
Yeah.
like if someone is buying a furniture and we're financing it, and so the furniture shop or the manufacturer gives us our revenue to be able to compensate for the no
Okay.
cost EMI.
Okay. So it's the merchants
Exactly.
which are
Merchants are giving
discounting.
us the revenue. Yeah.
Okay, understood. And in your brief description, you mentioned that you're also catering to the rural segment and tier 2 and expanding to tier 2 and tier 3 customers, which have no CIBIL score or which are like new borrowers for you. So, like, how are you then conducting your underwriting? Because since underwriting mechanism is one of the huge aspects for any lending fintech startup. So, like, how are you focusing on that, and how are you able to solve those problems for such type of borrowers?
Yeah, a great question. So, today there could be customers who have a credit history, but then maybe it's very thin. Like, they might have
Yeah.
only taken a small 10,000 rupee loan in the past. So then, how do we know we can give them a 1 lakh or 2 lakh rupee loan? And or there could be someone who's not taken any history. So we do see a good chunk of such customers. What we do is we do a thorough underwriting. Like one, we get their employment history. We look at the bank statement. We also have alternative ways of underwriting. So let's say it's a student who has just got placed at a very good company. We understand their job profile, their career trajectory. So we feel confident that now that they have got the job offer, they will be able to earn enough money to pay our loan off in the future. So then those are alternative ways that we do underwriting based on the track record of his education and career, predicting the career trajectory in the future. In the case of rooftop solar, we do our underwriting based on the electricity saving projection as well. So you might not have a credit history, but we know you're a homeowner because we only give loans to either a homeowner or a factory owner, for example. So there is obviously a certain stability you have in your,
Right.
like in your social life and in your career. And secondly, your electricity bill might be 3-4 thousand rupees. Now you're going to save that much money anyway, so that will be our EMI. So we know that they will have the ability to repay. So those are the different sort of ways that we are able to underwrite people, which a typical bank or a large lender might not look at.
Yeah. So, like, just thinking on those lines, so could you say that your underwriting mechanism, which is so strong, and I also saw on your LinkedIn that you're also hiring many tech leaders
Yeah.
for Creditfair. You're always on the hunt for good techies, I'm guessing. So, could this be the differentiating factor between your startup and every other fintech in the market that we see today?
Yeah, absolutely. I think definitely risk management, I would even make it a little bit broader because underwriting is one aspect, but
Yeah.
there is a lot to the risk management right from sourcing the customer till the disbursement and even the collection stage. So, like we have multiple layers of edges we have built. Since I mentioned we are a B2B B2C model, we've seen our ability to identify the right partners to source business from is one edge we already have. So that's again part of our underwriting and risk management. Then our policies, we are flexible. Like we do approve people who might not have a credit history. So our approval rate is better, but still our NPA has been about 1%
Oh,
across
great.
timelines. And then, yeah, we have a strong collections team. We have early warning signals through technology that we are getting. So, yeah, there are multiple aspects throughout the customer journey where our risk and technology are supporting us and giving us the edge.
Understood. And 1% less than 1% NPA is huge. Like in today's age, it's a great number to achieve.
Yeah.
So, like coming on to your B2B and B2C model. So, focusing on the B2B aspect. So, like when you were starting out back in 2018, so what were some of the challenges you faced in acquisition of such brands like
Right.
Tata Power and Asian Paints is also one of your
Sure.
B2B brand that you work with? And what impact, and a follow up question to this would be what impact or benefits were they able to see in their line of business after implementing your credit solutions?
Okay. So yeah, it's always a chicken and egg thing that like once like Asian Paints will tell you, oh, get more Tata on board, then we'll come on board, and Tata will tell you buy something.
Absolutely.
So
Absolutely.
so I think
Problems will be started.
through smart business development, that was a simple hack, so that we were able to kind of get them on board. I think we, like you earlier said, that we have identified very niche segments, which are not typically looked at by traditional lenders. So I would say that was a part of the good strategic call we made. We identified spaces where maybe a Bajaj was there, but no other lender was there. So they've already educated and aware about no cost EMI or about loans, but they were looking for a partner who might be better, or who at least might be a backup to
Okay.
Bajaj. So that way it did get easier for us. And Yeah, I think we also then showed them our technology. We showed them, it was very simple for them to just test out a few cases on our app. So it's like you don't have to commit anything. Just try giving us one, two cases and see, it's something that you see it's adding value to you. So they would be able to try before they buy, so to speak. So that was another way that we were able to get into these large and marquee merchants. After we've
Okay.
onboarded, we've typically seen that the approval rate, for example, has been 30 to 50% higher. So what that
Oh,
means
great.
is that minimum 5 to 10% more of their leads are getting converted into a customer because of the financing we are bringing on the table. Usually, the average order value also goes up. So, some
Right.
customer might be looking to buy something worth 5 lakhs because of their budget constraint, but now they can buy something worth 6 or 7 because we are happy to give them a limit, which they do deserve. So yeah, that way we feel like 20 to 30% from merchant to merchant. There's additional business value we've been able to generate.
Oh, great. Great. I think it's a great boost for any business to have like such a huge number increase in chunk of their leads and conversions.
Yeah.
So it's a great win-win scenario for both the parties which you have created. So one interesting thing I noticed for you mentioned that as a customer. So for example, if I'm logging into your app and I'm the customer seeking for a credit line or finance for a specific furniture buying or healthcare purposes. So, like, do I have to specify the purpose when I'm applying for a loan, or like, do you offer a blanket credit line based on my credit history or my employment history?
In our current journey, it is very much use case driven. So you need to specify that this is the purpose I'm looking for, and let's say we have QR codes at many of our partners. So
Yeah.
because like you'll scan the QR code, so we will know that you are at that point of sale or you're coming through that partner, and only then we consider and approve a case. As of now, we're not doing any personal loans, so to speak, like what you're
Okay.
mentioning, or we're not giving a blanket credit limit like, hey, Tanmay, here's 2 lakhs, and yeah, you can use it wherever you want. It's more that only the customers who are coming to us through our closed loop network, we are servicing them.
Okay, understood. Understood. And the example that you mentioned for Bajaj Finance, like how they educated these brands, like so, what sort of strategy are you implying at Creditfair for educating the masses about such kind of a financing product, wherein they don't have to pay any interest for the customer part, since the brands are now aware of such a financing product existing in the market. But for the consumer centric approach, like what
Sure.
special technique or marketing strategy or any social media campaign you run, which you see that is yielding you great results for
Yeah,
this purpose?
so something we do is more on the content marketing side. Like we're pretty active
Okay.
on our social media. We're trying to keep growing our followers, and we are doing a lot of PR as well. So typically every every week there would be some newspaper where we would talk about our products or any of our solutions, and usually a lot of journalists are happy to hear about either our products, but or could be even about our story. So indirectly, there's awareness created about what we're doing. And finally, we have done targeted lead gen campaigns for our partners as well. So let's say for IVF, for home improvements, now for rooftop solar, we've done lead generation campaigns to be able to add value to our merchant partners and help them get customers already educated about financing and both like finance and the end product. Still, I would say these are relatively small in terms of their scale and their impact, and we are
Okay.
looking to first scale up our business a bit more and then invest a lot more on the marketing and awareness piece. Since we would want to keep a bigger budget. These things are only effective if you do it in a big scale, and we
Right.
want to be
Makes
profitable.
sense.
So yeah, I think when our profits grow, we'll keep spending more money on this.
Absolutely, absolutely makes sense because we see many of the startups like today spend up mindlessly on marketing expenses and spending up like crores when they receive their funding and
Right.
not building on the sustainability part which you mentioned.
Sure.
So, Mr. Aditya, like I wanted to know, like I read somewhere in your press release which you do every week or two, which you mentioned, like your target was to acquire 5,000 merchant partners
Yeah.
and build your disbursements up to a $360 million book. So, like, is that a 1 year plan or is that like 3 year or 5 year plan goal that you're targeting for Creditfair?
It's a 3-year plan that we're targeting. Yeah.
Okay. And like, would you say that if a lending startup like yours come into the market, is there a potential for another one or two players like you to enter into this huge space? Like, what's the total market size that we're looking at for such a potential opportunity like yours?
So I mean, in general, like digital lending is a $1 trillion opportunity, right? I think
Absolutely.
that is I mean, that is forecasted, but it's also coming true. I feel every year we do see that, and
Yeah.
yeah, I mean that's why you see people like a Geo Financial Services also entering the market, because
Yes.
there is just such a big space that like large guys, medium, small guys, everyone can coexist. I think for the sectors we are in specifically, like upskilling, healthcare, rooftop
Really
solar,
happens.
etc. I do think, yeah, like green energy or EV or rooftop solar, these are all very fast growing spaces. So yeah, more people can exist. Um, yeah, I think it's just about like how motivated and how passionate people are about these different missions or use cases, and also frankly how patient they are.
Yeah.
India is a very big market, but it is also like fintech is a very heavily regulated industry now,
Yes.
more so in the last 1 2 years. The RBI has really stepped in. We see every few months RBI throws a googly at the industry.
Right.
So
Right.
yeah, I think if people are happy to be regulated and are in it for the next decade, then there is room for everyone. But if it's someone is expecting like 2 3 years, a very quick growth and outcome, then it's a tough split.
And just like that, becoming unicorn in the next 1 or 2 years,
Right.
fate that everyone
Yeah,
at
yeah.
today's age. Yeah.
Everyone is a Kunal Shah, right? So yeah, it's like,
Right, right. So one thing that came to my mind was like how big this market is. We all agree that it's heading to 1 trillion mark. And now, when there is such a huge potential in the market, your demand for such products, since it's a no-cost EMI structure, it would be huge. So, like, how are you catering to that anticipated demand? Because I'm assuming there would be some rejection rate also in your
sure,
underwriting assessment.
of
And
course.
like, how are you sourcing that demand from various angles?
Yeah. I mean, we are pretty. Since we're B2B B2C, actually, that demand depends on our merchants. So it depends, like on how much business they are getting and how well they are growing. It really depends on that. Since it's B2B B2C, it depends on the scale of the partners that we have as well as the number of partners that we have, right?
Right.
Yeah, I mean, little bit it is in our control that we could partner with a fewer number of people until like we keep having the capacity to service them. So we are very conscious of first like doing a certain number of partnerships, making sure our net promoter score, our the service quality is up to par with those X number of partners, and then we keep adding more and more, and that way, like we are able to grow the business. So that's on the disbursement and the demand of money, as we call it. On the supply
Yeah.
of money, we first started with only our own NBFC, but now we've become more of a platform. So we source
Okay.
money from other NBFCs, from banks, and also retail investors. We've also, in fact, got a peer-to-peer lending license now, so we can
Oh, you
take
did.
retail money also. So that's where the other part of our business, which I haven't spoken too much about yet, but that is a key differentiator as well. The ability to source the right cost of funds, the right amount of funds at the right time, to service our borrowers who want loans at the right cost and the right time, and kind of matching that using technology. So we built our own rule engines to kind of then
Oh,
uh,
understood.
forecast a bit of, like, the demand, and then also allocate the right borrower to the right lender. So yeah, that's how we're able to prepare and balance things out.
Understood. Understood. So I didn't know the P2P part that you guys were building. So
Yeah,
I think it's a very interesting space again to be in, since India has only a limited number of P2P players as of now,
that's true.
and you acquiring that license is a huge win for you.
Yeah, thanks. Yeah, took a lot of effort.
Yeah, I can understand. So, like speaking of the funding that you mentioned, I believe that you have now raised over 25 million USD over your 5 rounds with a mix of equity and debt financing.
Right.
Like,
Yeah,
plus I
over five
also saw
years,
that.
not 5 rounds. Sure.
Yeah, yeah. So I also saw that you raised some conventional debt from SBI, if
Yeah,
I'm not wrong.
that's
And
right.
I read in your PR that you stated that it would help us provide the right type of financing at the right cost. So just wanted to delve deeper into this statement and what was the strategic reason for going for this debt when you have already raised a good chunk of money from the institutional and VC investors.
No, so we are a lending business, and our raw material is money, right? So there's
Yeah.
always going to be a certain leverage in our on our balance sheet, because the equity investors aren't looking for us to only deploy their money and get returns. They are looking for a multiplier and a scale, which can happen even, let's say, without them having to continuously put in money into the business. So that's where getting lenders like SBI is like something we are very proud of, because the cost of funds from a SBI would be 40% less, 30 to 40% less compared to
Absolutely.
most of our other sources of funds, which are used for onward lending. So that's where we mentioned that having a SBI is very critical to help us then go after borrowers who might be very prime, but where our cost of funds is not fitting them. And the other part we also mentioned is on the right products. So it's related to the tenure and the flexibility. Usually, any
Okay.
lender will give you money, let's say, for a certain defined period of time. SBI has given it to us for the longest, like they gave us loans for 3 years, for example, whereas typically
Okay.
other lenders are giving us money for 2 years. So then that gives us more visibility that I need to repay SBI over 3 years, so I can give loans also for 3 years. And that is required, especially in like a rooftop solar and these sort of categories where people need 3 to 5 years to repay off the loans.
Right.
So yeah, I think that's what I was trying to highlight, and I guess the more banks or the more retail investors we can get over the long term, usually those are the cheapest cost of funds and the most sticky as well. So that's what
Right.
we do try to focus on. But we've had many other partners who are other NBFCs who've been very supportive in our growth, as well as our lead investors, LC Nueva and Capital A as well from the last round, have been very supportive and guided us a lot on how to scale the business.
Right. I believe the margins that you would have that gets expanded once you have the low cost of funds available with you for a span of 3 years, let's say, for example, with SBI, right?
Yeah, absolutely. It's a big benefit on the profitability front.
Right. So you also mentioned that you also partner up with a lot of NBFCs. So which we see like many of the lending startups do. Like, but you, I guess you already had your NBFC license when
Yeah.
you started in 2018. So would you say that that served as an edge for you, since in the initial times landing a NBFC partnership is very difficult for any business. Since you have that license on your own, so you could make the disbursements. So would you say
Absolutely.
that was an edge, and how helpful has that license been for you as a business?
No, you're absolutely right. It's been great because it gives us control on our credit policy. It gives us control to try new things, to try new products, um, and B having our own NBFC license gives us that discipline of being compliant from day one, which
Right.
we took that conscious call that we want to be compliant and regulated in a country like India, since there is always that is the sort of ethos we have in our country. And thirdly, in tough times, when the liquidity is maybe low, a lot of other fintechs are dependent on the underlying NBFCs, whereas
Right.
so they have had to sometimes disburse money much later than they would have wanted to. The client was expecting the money today, but it's coming 3 days, 5 days later. So that customer experience can go for a toss very easily. We've had that full control because we had our own NBFC. Now with our own B2B NBFC, again, we'll have a lot of control on the user experience. So from a user experience perspective, from a diversification of funds and liquidity perspective, as well as you could say like a, a scalability in the long term, because now we have built our track record, we have our own rating. People like SBI have come on board because we're a NBFC. If we were a fintech, then probably they wouldn't have lent money to us. So all those three aspects is something we've been very lucky to get the benefit of because we had our own NBFC.
Understood. Understood. I think having an NBFC license is like a blessing for any fintech, I would say, in today's age. But you also have to be, it's a, like a double-edged sword, right? You mentioned you have to be compliant with RBI stepping in with a lot of regulation policies changes that we
Sure.
see over a couple of months, every couple of months.
Right.
So, Mr. Aditya, apart from this, I also noticed that you also mentioned a portfolio for your family offices, wherein you make some angel investments, and you have also seen exits from one or many of them, like Cursor Technologies being acquired by Perfius, and many others are in the pipeline. So, like, how are you managing the two of them? And since managing a portfolio is like another job in itself, and then running a company like Creditfair. So how are you like balancing those two and juggling among those?
I mean, my family has been in the stock markets for over 35 years. My dad runs that. And the investments for our family office, it's in a few selective startups. A lot of them are through angel networks or other friends who are angels. So, frankly, I don't actually spend a lot of time sourcing or managing that portfolio. What it does help me a lot is connects me to like-minded entrepreneurs, gets me into the whole startup and founder community, and I've learned a lot from this community, and I hope I can give back as well. So that's the way I look at it. That it's a great way for me to learn actual business lessons from other people who are doing who are running their own show or who are facing similar problems. The industry would be different, but ultimately hiring, training, technology, marketing, a lot of the problems in building a business can be kind of similar. So yeah, I mean, I really don't get much time outside of credit fair, and this is maybe where 3% of my time might go, not more than that.
Okay.
From the financial aspect, and yeah, from learning aspects, I get a lot more out of it, I guess, than I've been able to put in.
So it seems like a great ROI for you in this.
Yeah, I'm happy. Yeah, no complaints.
Yeah. So, like, since you have met with a lot of like-minded founders, and you have seen the startup community grow as well in the Indian space. So, like, what are your top two or three assessments that you make once you look at a new startup with solving a certain kind of a problem for the industry? So, like, what are your top two, three aspects that you look at, and you get a sense of where this startup would be headed in the next 3, 5 years?
Right. So just to clarify, the question is about how do I select an interesting startup maybe for my family's investments.
Yeah.
Right. First, it's about the people. We do very early stage. We're typically investing in the first or second round of the company. So at that stage, like the idea, I don't feel is really crystallized. What is clear is the founder, like how driven, motivated they are. The market is something we definitely look at. It should be interesting market where uh, there, there would be enough opportunity to make something big and like which is also growing at a good rate. And third, we look at like any early products, early like go to market to understand if there is enough drive, motivation, and enough skin in the game of the founder, uh, along with understanding the team as well. So the team and the founder is usually the biggest bet. Secondly, the space, and thirdly, like the chance of course, an exit happening is something that you would want to understand. But yeah, in that order and in decreasing order of importance.
Understood. Understood. So one thing I noticed that you mentioned like it's very important to bet on people once you are investing in a lot of early stage startup. So like I noticed that Mr. Vikas Agrawal is leading your disbursements and partnership sides, and he's also one of the co-founders for Creditfair.
Yeah.
So like how was that experience, and how was like adding him to the team boosted your business, and how has his perspective, molded Creditfair's lending business?
Right. Yeah, being a startup founder is not easy. It's a tough journey, and it's really great to have a co-founder. So it's hard for me to measure the impact, but all I can say is, 1 plus 1 can make 11.
Right.
That is the sort of at least sentiment, and yeah, I think your question was also more about how is he involved, or how's what is he like focusing on in the business?
Yeah, yeah, I believe because he's looking at more of the supply side of
Yeah.
the business, which I can see.
No, it's actually on the demand side now. So there's two aspects. One is on the distribution part. He's building out, and he's
Okay.
managing all the team who are in touch with the merchants, who are our sourcing partners, who are the team that's doing the customer experience as well in terms of onboarding of the borrowers. He's looking at that, and on the supply side, he's also he comes from a background of debt raise and working with banks and
Yes.
NBFCs. So on the money we're raising through institutional channels, he's leading that. And I'm focusing on credit and risk and technology apart from the retail investor side. So we're both involved in both sides of the business. It's been great to have him on board. He's really helped us streamline a lot of the training, the culture in the sales organization. He's been very good at it, despite having limited experience in doing that in the past. So it really helps when you have smart people, like I said, betting on the person. So you know that once they give their heart and mind to something, they just make changes happen. We've seen that solar as a category has really grown fast under his leadership. So it used to be 1% of our portfolio. Now it's on track to become 25-30% of our portfolio within like less than a
Great.
year and a half. So these are the sort of changes that have been happening, and we've been able to grow the company, like get lenders like SBI on board as well. Thanks to having people like him on board.
Right. I think it's a great value add for any business. Like you mentioned, 1 plus 1 can make 11. I believe for any startup, it's like a dream come true when you find such a co-founder which can
Yeah.
help you scale your business to such heights. And you mentioned that building that culture is very important for any startup. So, like when you are a new startup, that culture is there. But once you scale up, like how do you prevent that this culture stays the same and does not get distorted or diluted once you grow it at a certain pace, because you are a startup and
Yeah.
growing at a certain pace? How do you ensure that culture stays intact?
Right. So yeah, if someone has the answer, I would love to know myself. I think that's the hardest thing. We do
Yes.
try our best. We do simple things like make sure that all the leaders are very approachable. We have a very open floor. I mean, I'm sure a lot of startups do, but we try to maintain that where you know. There's no like separate cabins or anything for the leaders or the founders, co-founders, etc. So everyone can meet, can see what we're doing, can hopefully imbibe the way we think, the way we work, and that is ultimately the culture. The values and the decision-making processes that you can institutionalize across the company. And what we try to do is also, as much as possible, promote from within, because
Right.
there are a lot of people who joined us as freshers from college or whatever within, before they were 25 years old. So now they've been with us for anywhere 3 to 5 years now since we started. So we are relying a lot on them as well, because they have learned a lot of and imbibed the culture that as co-founders we've been trying to build, and we and they will pass it on to the next generation of recruits and leaders as well.
Yes.
So
Okay.
yeah, I think those are the two main ways where having an open culture, having constant like town halls and things like that. And going forward, we are looking to also invest a lot more in our training and education sessions. And yeah, final one I would also mention is not necessarily on the values, but at least alignment on the business we've seen with the OKR tools. So
Okay.
setting OKRs and KRAs, which are
Yeah.
all aligning together towards a company goal, has helped us at least transmit our thoughts and our priorities better.
Yeah, I think it's become very valuable setting up
Yes.
those KRAs so that everyone in the team is aligned towards the common objectives which the company is
Absolutely.
trying to achieve.
Right.
Yeah. So now I wanted to take you back years ago when you did your education. So I was very intrigued by seeing that you have done your electrical engineering with economics. I guess economics was your main, like the last year subject that you generally do from the Northwestern University. So like why is such a diverse choice? Because tech and economics generally we don't see people pursuing that together. And like how do you navigate it then from there to the investment space wherein you were working with Pimco and then building something in the lending space? Like, how has that journey been?
Yeah, I come from a family of entrepreneurs. My granddad was a gold and silver trader. My dad has been an equity trader. So, business economics has been in my blood and something I've always been very interested and fascinated by. At the same time, technology is the future, and frankly, my grandmother really pushed me that, hey, you are a good student. Why don't you focus on computers and on
Yeah.
technology? So somewhere, I think like I went into engineering because of my grandmother, and at the same time, my heart has been in business and investments. So I did a double major, and that's also a reason I went to the US, because you have the flexibility to
Yeah.
customize your education. So I got a chance to do two majors, one in engineering as well as one in economics.
Right. So, and like, has that been very fruitful in building the credit risk assessments and playing with the technology here in Creditfair? Like, I would assume, like,
I mean, my whole career has been in finance. I've actually never worked professionally on the technology side. I'll be very honest.
yeah.
But in my last job, before starting Creditfair, I got to work as a product owner on the consumer app for a fintech company in London, and I got to work very closely with the tech team. In some of my internships, also, I did a lot of analytics on my own using Python and like SQL, which I just kind of learned on my own. So I think as an engineer, what it has taught me is that I'm not worried about code, or I mean, I don't get scared about technology, which I think a bunch of, or I probably have maybe fewer misconceptions about technology. So at least I'm able to understand what the developer might be thinking, what level of detail and instructions they require, and be able to give that. That's been, I think, a big that's been really helpful for me. Besides, of course, as an engineer, just a lot more thorough. Your the decisions are a lot more thought through and
Yeah.
structured. Yeah, I think that's been the biggest benefit from the educational perspective.
Yeah, I think it makes sense because once you have an idea of the basics, then you can lay that strong foundation and build upon that. Now,
Right.
since you had that basics of the tech sorted, then it would
Yeah.
have helped you in building that system for the business that you're doing. Like, so in today's age, we see that a lot of trends keep on changing within a fraction of days or weeks. Like, so how do you like stay in that mindset of upskilling yourself consistently with AI coming in now, and we see a lot of debates happening whether this is like a boon or bane for the economy. And so, is there any like sort of a ritual that you follow or some daily activities that you do on a recurring basis to keep that yourself in that mindset of upskilling yourself and keeping up with the trends?
Right. That's a good question. I feel that being part of a lot of these different WhatsApp groups, which are of professionals, like-minded professionals, has been really helpful for me, frankly, in upskilling, as well as attending a lot of different meetings or conferences. So some of these things are not very structured. The only structured thing I would say is that I'm quite diligent about going through the content that is shared on a lot of groups, which from people that I
Okay.
trust and respect.
Yeah.
That really helps me keep up with the trends. On the weekends, I do read a bunch of newsletters, and I do listen to a lot of podcasts. So I think it's a combination of these habits where I I am quite diligent about reading certain people's content, and then when they refer other people, then that's when again I'm able to
Right.
get channeled in the right direction. So that helps a lot. And yeah, I mean, this is something I would like to spend more time on. Actually, it's not been disciplined enough. But I remember when I was working in London before starting Creditfair, I tried to do some Coursera courses on machine learning, and like set
Yeah.
up all the code base and everything on my laptop and actually play around with it. So something like
Great.
that is what I hope I can carve out more time for myself, and I need to be able to, I think, delegate a lot better and reduce the firefighting that I might have to do on a day-to-day basis, so I can go much deeper into all these new technologies. We'll work on that for the next year.
Great. Great. I think all of us are heading into that direction wherein we need to upskill and set up
Absolutely.
those systems for ourselves wherein we are regularly updating ourselves with the current trends and knowledge.
That's right.
I wanted to know, like, Mr. Aditya, the vision and your grand scheme of plans for credit fair that you may have, like a 5 year or 10 year journey, which you mentioned, like you have to be patient for a decade to see those results yielding for a fintech startup. So,
Yes.
what are your plans and vision for that decade long plan for credit fair?
Yeah, like I told you, the idea was how can I help a million Indians improve their finances? We are kind of only about 8-10% there. So I think I'll require another 4 5 years to achieve that vision. And what that would mean in terms of business numbers would be that having financed, let's say, over three 400,000 people on solar rooftops, and helping them kind of save that much in electricity. So today, that is like today we have helped over 2,300 customers, and they're saving
Okay,
over 1 crore monthly in electricity bills. So you
that's a
can
great
multiply
number.
that by 100x. So yeah, that would be the goal. How do we help people save over 100 crores monthly in electricity bills? Would be one of the goals that we have in the next 5 years. Similarly, in education, like we've helped upskill over 20,000 people. So again, add a zero there. So how do we get that to,
Right.
another 2-3 lakh students that we can help upskill, like the discussion we just had, and get a better job or improve the earnings from their current job. And finally, have at least 100,000 plus retail investors that we have helped grow their wealth, on a 10 to 12% sort of compounded basis. So yeah, those are the business goals.
I think that's a great vision to have. Like they say, like at the number that you have, just put a zero at the end, which you mentioned. Like that
Right.
becomes your 5 year goal.
Yeah,
So
yeah,
that's a great
it's
simple hack.
pretty straightforward.
Right. So lastly, I wanted to know, like, were you satisfied with the interim budget presented today by a financial minister?
I didn't have high expectations, so I am satisfied because
Okay.
it is an interim budget. It's before the elections, so
Yeah.
and I personally feel the budget is a relic of a bygone era, as they say. Now the government keeps taking actions throughout the year and doesn't really wait for the budget. Whereas back in the early '90s, mid '90s, it was a very key event.
Yeah.
Um, yeah, since we are doing a lot in rooftop solar, it was great to see the Prime Minister announce the Suryodaya Yojana just after
Yeah.
the Ayodhya temple
Yes.
establishment, right? And so they did at least do a follow up, and they have mentioned, at least the headlines that I checked, there is investments and support going to come in for rooftop solar as well as other
Yes.
clean energy projects. So yeah, happy to see that. Happy to see that we're not having a very profligate government, a government that's going to just splurge on welfare without thinking about the balance that they need to strike and make sure that our finances as a country are strong, because we need to have that balance of investing in the infrastructure but being disciplined and not wasting money. So I
Yes.
think broadly see that, and yeah, that's all we can really hope for and expect for.
Very well said. Very well said. I don't have anything to add to that concluding remark. So thank you so much, Mr. Aditya. It was really lovely talking to you, and for our audience and for us, it was a very insightful discussion, learning about nuances of such a great business and the impact that you're trying to create on the society.
Thank you, Tanmay.
Thank you, Mr. Aditya.
Thanks for having me. I'm glad if I was able to help. Thank you.
Thank you.